9 EMA, supply and demand, key levels, a negative 4% day on Nasdaq. Let's get right into the video. I had a different video planned for today, but you know, like how Tom Brady did, I had to call an audible and switch it up on you guys. So let's waste no more time and jump over to think or swim. So the Nasdaq fell from about 13.1 down to 12,550. It was about a 4% drop, 4.5% drop, or a 600-point move on the day. And pretty much everything I made videos on up until this point came to fruition. You had supply zone rejections, you had key level rejections, you could have taken short entries off these key levels, and you also could have rode the 9 EMA literally the entire way down. You could have held your position from open to close almost on this day. So all the videos I made, if you watched them, you were ready this day, you should have been surprised. I already know people are going to say that Jerome Powell, tanked the market. It was a rug pull, this and that. The market rolled over. But before even Jerome spoke, I posted a picture of the supply zone right here on Nasdaq. I warned people that Nasdaq was in supply and that we could expect a big move lower. And little did we know, I don't think anyone expected a 600-point drop. If you were prepared this day and were ready when you saw Nasdaq near the supply zone, you could have taken full advantage of this move. Zooming in a little bit further to the 5-minute chart on Nasdaq, you open up here in the supply zone. I posted this picture around here at like 6:15, 15 minutes before market opened. So you started pulling back out the supply zone after PCE data. So market rallied. It was up about 100 points, pulled back, and was kind of chopping around. Market open was right here in this green hammer. Market was chopping around. Jerome started speaking right here at 7 o'clock Pacific. You rallied right back into the supply zone. You worked out of it at 13.2. And then you sold off pretty much the entire day. Now, if I pull the 9 EMA up, so the second you broke over the 9 EMA, you didn't get it closed below until right here about 9.50. And you could have closed out your position right here. And we also had this key level down here at 12.8, and you back tested and rejected it. It will give you more confirmation to continue holding this trade down lower. And plus, with all the bearish sentiment in the market, it didn't really make much sense to, sell out this position early if you're holding this day. All right, so now we're looking at Apple. And Apple, same story here. Jerome started speaking right here at 7. Market kind of rallied up. Look exactly where we hit on the Apple. You hit this key level here at 170.95 we've been talking about for weeks and months. It would also coincide with the pre-market high. People were trying to go long here, not knowing there's a key level and not knowing the Nasdaq was hitting as a giant supply zone at 13.2. But people who were paying attention, they took puts off this key level, and look exactly what happened the entire day. You took puts up here at 171. You could have rode the market down. You could have rode Apple down about 8 points. And getting an Apple move $8 in a single day is pretty unusual and it's not really likely. So being able to take advantage is something you need to be able to do. And look what happened right here. You didn't get a single close above the 9 EMA till about 10 o'clock. And when you did get a close above the 9 EMA, look at how weak the volume was down here. You're barely trading any shares. You saw it forming this, bear flag rising wedge type of pattern. And look at the volume that came in on this red candle the second you broke the flag. Huge increasing volume. It was the most volume of the day at the time. And you continued selling off even lower on Apple. And then towards the end of the day, you just kind of started chopping sideways. Even going in after hours, besides this close at 10 o'clock, you didn't make a single close above the 9 EMA the entire day. And this is why it's so important to be ready when you have trending days like these. When the market's just going straight down or straight up, you have the 9 EMA in your chart, or it's such a clear indicator, allows you to ride these massive trends to the upside or the downside when you get days like these. Another example here on NVDA, same story. Jerome started speaking here, big green candle. Look exactly where price rejected off of. This kilo 178.66 we've been talking about for weeks. You wicked off it perfectly. You could have taken a short position up here. You stop loss above 5 days somewhere up here. Stop loss above pre-market high. And NVIDIA literally didn't make a close below 9 EMA the entire day. And look at where it closed at end of day and in the after hours. It hit this key level down here at 162.14 we've been talking about for weeks. If you were prepared this day with the 9 EMA and you watched the videos, there was almost no reason at all this entire day to sell NVIDIA. And NVIDIA sold off about 9%, $16. If you bought puts down here at 178, I'm sure they're up almost 2,000% today. I don't think anyone expected to move a 4% on the Nasdaq or a move of almost 10% of NVIDIA, but this is why you always have to be prepared. And if you watch the videos, and if you're ready with key levels in the 9 EMA in your chart, you already knew what to do. Just let the 9 EMA work for you and just ride the 9 until you get closed above it. And NVIDIA was almost a picture perfect example of just letting the 9 EMA work for you. And there's almost no reason to close your trade the entire day because the 9 EMA is your guide. And until you get back-to-back consecutive closes above the 90 EMA, there's no reason to close it. And one more example for you guys. So the last example here is on ES, the S&P futures. You hit this key level up here in pre-market on PCE data at 42.12, which is the January low. You hit it, got rejected. And then when Jerome started speaking right here on this big green candle, you made a lower high. You could have taken a short position up here, SPX, SPY puts, or just gone short on futures. Your stop loss was above up here at 42.20. So look at this risk reward here. If you're risking above the pre-market highs right here, this was your risk on the trade. You got in the close of this red candle. Look at your potential reward if you had supply and demand on your chart. And if you're taking trades off key levels, this was your risk on the trade, and this was your potential reward. Now clearly, you had the 90 EMA chart as well, and the chart stretched even further and further to demand zones below. And look at the potential reward for this trade. And this is where the ES closed on the day. You're risking this little on the trade. You got a really good entry on the trade. You had this key level. You had a trade plan. And you just rode the 90 EMA the entire way down. You don't have to think about it. Look at this risk reward in this trade. I do this almost every video, but it's so important to realize this and realize what taking good entries and having a trade plan does for you guys. This was a 5-to-1 risk reward. Now, clearly you gotta be scaling out on the way down and taking profits, but the 90 EMA, I mean, besides for this little choppy price action right here, which could have been a bear flag, you could have rode the 90 EMA the entire way down. So when you see days like this and you're prepared by watching the videos, the 90 EMA, using supply and demand, taking trades off key levels, setting yourself up with great risk reward setups. So days like this are pretty much stress free and almost like an instant money printer. You have your own personal money printer in your pocket. You don't have to think about it. Just ride the 90 EMA and just let the trade work for you. It's simple. Now, if you learn anything from this video, or if I've helped you learn anything and make money, just drop a like and comment below and stay tuned for the next video. Thanks for watching.